So you did it. You sold the house, you bought the perfect rig, and that big, beautiful open road is calling your name. It's the dream, right? Ultimate freedom. But between that dream and the reality, there's a little bit of paperwork, and it all boils down to one single critical word: domicile.
And that's the big question, isn't it? This is the central puzzle for every single full-time RVer. And look, getting this wrong can lead to audits, some pretty nasty tax penalties, and just a whole mountain of headaches. So let's untangle this thing together so you can hit the road with some real peace of mind.
Okay, first things first, the important legal stuff. Think of this as your roadmap, a guide to help you ask the right questions. This is absolutely not a substitute for professional, legal, or tax advice. You've got to talk to your own CPA and your attorney about your specific situation. All right, here's our game plan. We're going to kick things off by comparing the big three domicile states for RVers. Then we're diving deep into the critical IRS tax turtle trap that trips up so many people. And finally, we'll lay out a clear roadmap to help you stay compliant. You'll find that most full-time RVers end up setting up shop in one of three states: South Dakota, Texas, or Florida. And the big obvious reason? None of them have a state income tax. But especially for seniors, the best choice really depends on a whole lot more than just that. So let's break them down.
Let's start with South Dakota. People often call this one the fastest and easiest option out there. It's really built a reputation for being incredibly, frictionless for the nomadic lifestyle. So let's talk pros and cons. On the plus side, it is ridiculously easy. I mean, you literally only have to stay one single night to get your driver's license. The vehicle excise tax is low, just 4%, and you can totally forget about annual vehicle inspections. But, and listen, this is a huge one, especially if you're not on Medicare yet, the health insurance situation can be a real problem. A lot of the plans there just don't offer nationwide coverage. And think about this. If your old high-tax state decides to audit you, it can be pretty tough to prove you actually live in a place you only visited for 24 hours.
Okay, next up, Texas. Now, thanks to the legendary Escapees RV Club, Texas has this incredibly powerful and supportive legal culture that was built from the ground up, specifically for RVers.
The big advantage here is that Texas is just made for this lifestyle, which gives you a ton of peace of mind. And some great news. Starting in 2025, they're getting rid of annual vehicle inspections. But here's the catch, and you really need to pay attention to this. If your rig's gross weight is over 26,000 pounds, you're going to need a special license. And yep, that means taking a road test in your big rig. The sales tax on your vehicle is also a bit steeper at 6.25%.
And that brings us to our final contender, Florida, which has been the go-to favorite for snowbirds and really anyone with ties to the East Coast for, forever. Now, this is where Florida really shines: health insurance. You can find excellent PPO plans that work all across the country, and that is a huge, huge deal. Florida also has this unique legal tool. You can file a formal declaration of domicile with the court, which is just powerful, rock-solid evidence if you ever get audited. The trade-offs? Well, Florida has some of the highest RV insurance rates in the nation, and you're going to get hit with a one-time $225 fee just to register your vehicle when you first move there. This table just lays out the financial differences perfectly. You can see right away South Dakota is cheapest on that initial tax. Florida hits you with that $225 fee right up front, but then, look at that. It has the lowest annual registration for a heavy RV by a country mile. And Texas, wow, that's a surprisingly high annual fee for the big rigs. You can see how each state kind of gives with one hand and takes with the other. Okay, so you've picked your state, you've got your mail forwarding service set up, and you have that shiny new driver's license in your wallet. You're done, right? Nope, not even close. Now we have to talk about the IRS and a very expensive trap that a lot of RVers fall into. First, let's get crystal clear on what we've been talking about so far: your state domicile. Think of it as your legal center of gravity. It's that one place you legally intend to come back to, even when you're thousands of miles away. This is what governs your driver's license, your right to vote, and your state taxes. But, and this is a big but, the IRS has its own totally separate idea called a tax home. And this has absolutely nothing to do with your family or where you feel like you live. It is a purely economic concept. It's your main place of business or work. Period. So here it is, the most crucial point of this entire discussion. Your state domicile is not automatically your IRS tax home. They are two completely different things, judged by two different sets of rules. And confusing them, that is the heart of the trap. If you sell your house and travel full-time without a main place of business, the IRS actually has a special name for you. You're an itinerant. Some tax pros have an even better name for it, though. They call you a tax turtle because, you carry your home on your back.
So what, right? Who cares what the IRS calls you? Well, you should care a lot, because the financial consequences of this little label are absolutely enormous.
Here's the gut punch. From the IRS's point of view, if your tax home is your RV and it moves with you, then you are never technically away from home for business purposes. And if you're never away from home, you can't deduct any of your travel-related business expenses. That means no campground fees, no mileage, no business meals on the road, nothing. It all goes away.
The IRS uses this simple 3-factor test to figure out if you have a real tax home or if you're an itinerant. And as you can probably guess, a typical full-time RVer who has sold their sticks and bricks house fails this test spectacularly. You aren't duplicating living expenses, and you're constantly abandoning the areas you visit. That means you probably only satisfy one of these factors at best, which officially makes you an itinerant.
And this quote from a major court case really explains the logic behind it all. The whole point of the travel deduction is to help people who are paying for 2 places at once: their permanent home and their expenses on the road for work. If you've sold your home, you aren't duplicating those costs, so the IRS says, sorry, you don't get the deduction.
So if your old high-tax state comes knocking on your door with an audit letter, how in the world do you prove that you've truly left and set up your new domicile for real? Let's move into our last section and build a practical roadmap for you. High-tax states like California and New York are absolutely notorious for these kinds of audits, and they look way past the paperwork to find your true intent. A driver's license just isn't enough. They want to see action. Did you change your doctors, your dentist, even your dog's vet to your new state? Did you move valuable personal items, transfer your safe deposit box, or update your will using your new state's legal forms? Did you quit the country club back home and join a new one in Florida? These are the real-world ties that prove you've actually moved your center of gravity. So let's just boil this all down to the single most important lesson here. Getting a new driver's license and a mailbox, that solves your state domicile problem. But it does not, for one single second, solve the IRS tax home problem. You have to think of them as 2 parallel tracks, and you have to be compliant on both of them. That dream of total freedom on the open road, it is absolutely achievable. But it demands that you be just as precise with your paperwork as you are with your travel plans. So the real question is, after seeing all of this, are you prepared?